Hi there, welcome to Neppy Invests. I've had a few questions in regards to Damstra recently, in particular the share price performance this company has been experiencing recently, and more than likely the share price performance over the past year. Because if we go back to October 2020, the share price of Damstra reached a high of about $2.50, maybe just short of that. And I'll always remember Damstra as a company that Extreme Opportunities, Motley Fool Surfers, recommended this company. And just off the back of that recommendation, the share price rose something like 20% and reached a high of $2.44, which was a high in this company's share price. And ever since then, the share price has fallen, and it just kept on falling. We did see a bit of a rally about 3 or 4 months ago, and I did a video on the back of that rally after the June quarter Appendix 4C, but the share price has kept on falling since then because of earnings downgrade from this company. And when I looked at the share price performance on Friday, the 26th of November, share price fell another 16% on the day after the AGM. So I had a look if there was anything in the AGM that would lead to share price falling, and it was another downgrade from the company. And whenever companies release downgrades, that will significantly affect their share price. So at this point in time, the management have not been doing a good job with this company because they've been doing quite a few downgrades, and that's why the share price has fallen from $2.50 to a current share price of around 43 cents. That's a fall of 80% in just over 1 year. No wonder I'm getting questions about this company. What does Damstra do, and why should we be excited about the possibilities of this company moving forward? Damstra is a software as a service company. That's what they describe themselves as. And they do have an enterprise protection platform, EPP. That's all about protecting organizations from unnecessary and unforeseen business risks, preparing people, making places safe, connecting assets, and for information to be accessible. So they are focused on protecting human resources, workplace safety, investment in assets. This slide here is taken straight from one of their presentations. I then went to their website to see exactly what sort of products they do have. I do like to go to a company's website just to see what sort of products, services they do provide. In particular, for any companies I more than likely will never need to use their services, and Damstra definitely fits into that. So I just went to their products part of their website just to see what products they do have. For instance, workforce management is all about tracking time and attendance and ensuring all workers are compliant at all times. It seems like compliancy is a very important thing for Damstra, and that's what they are selling to a lot of their clients. For instance, if you go to asset management product, actively track and maintain assets on site to ensure they are compliant as per client regulations and specifications. And then Damstra Safety, another one of their products, is all about managing risk, compliance, and safety intelligently. Damstra does have a long history. I actually did listen to a podcast over a year ago in regards to this company, and a fairly complex history. Founded in 1998 and listed on the ASX on the 16th of October 2019. They just had their 2-year anniversary. The CEO and founder of this company is Christian Damstra. I have a feeling, if I remember correctly, he and his father founded this company, and he has a 10% holding in this company. The largest shareholder is the chairman, I think, if I remember correctly, and his name is Johannes Rizal. He has a 9.8%, so slightly higher holding than Christian. There might be a reason behind that. Maybe that's part of Joanne's contract with this company, is he has to be the largest shareholder. I have no idea. Now it comes to the interesting part, and that is the market cap or valuation of this company, $85 million at a share price of 43 cents, which was a share price at closing on the 26th of November, when we did see a share price fall 16% on that day. That's really intriguing, $85 million. When Extreme Opportunities recommended this company, the market cap was almost $500 million. It actually might have been over $500 million. So you can just see here, over the past 13 months, the value of this company has fallen from 500 million to 85 million. And we have to ask ourselves as investors, does this represent good value or is it a value trap? Damstra's ticker code is DTC. You just had a look at the share price just after opening of trading on the 29th of November. I'm doing this video at 10:45 a.m. local time, so we don't have daylight saving in Brisbane, which means trading's been open for almost 2 hours. I was thinking there might be a bit of a rebound today because American futures are up and it does look like the markets are rebounding. And the share price actually was up for Damstra. I think it was up to about 44.5 cents. Now let's have a look at some of the financials of Damstra, comparing financial year 21 to financial year 20 numbers. And when we do a comparison, or this comparison, nothing looks too bad here. Revenue climbed from 19.6 million to 27.1 million. Gross margins increased by 10% to 79%. I would prefer that to be a little bit higher, towards 90%. That's my sort of target range for SaaS companies. Operating cash flow positive, though, that did drop over the past year from 4.7 million to 1.9 million. They're not profitable, loss-making still by $8.6 million in financial year 21. They do have a little bit of debt and a little bit of cash, but they are net debt of $4 billion. Now comes the important thing, because if this is a SaaS company and they call themselves a SaaS company, annual recurring revenue is very important, and that did climb by $13 million over a year from 21.2 million to 34.5 million. If we calculate the enterprise value to annual recurring revenue with the share price at 43 cents and the enterprise value at about 90 million, we get 2.6. And if that annual recurring revenue can keep on growing over the next few years, the valuation of this company does look attractive at these prices right now. And that's one thing and one reason I became interested in Damstra and looking at a potential long-term position in this company. Now what I'm going to do is look at the September 2020 quarterly report. And this was around the time the share price was at an all-time high at $2, or between $2 and $2.40. And I'm just going to compare the most recent quarter to this quarter to see how the business has progressed over the past year. Receipts to customers, $7.1 million. But the most important thing here was Damstra was operating cash flow positive in the September quarter, which was the first quarter of financial year 21, by $2.4 million. And I do remember seeing this and thinking this was a good quarter for the company, and the valuation of the company around this time was about 400 million. So this could justify the valuation at that point in time. Now, they did spend $956,000 on capital expenditure, which is property, plant, and equipment, and $905,000 on intellectual property. So that operational cash flow wasn't all going to the bottom line. You can see that with the cash on hand only increasing by $200,000, but finished the quarter at $9.6 million. Now let's have a look at the most recent quarter report to see how things have progressed for Damstra. If we look at receipts in isolation, you might say it has been an okay year. Receipts did climb by $600,000 in a year. I would prefer that to be a little bit higher. But they were operational cash flow by more than $2 million, operational cash flow positive by more than $2 million in the previous year. Now they're operational cash flow negative by almost $2 million. So what's going on here? How can they increase receipts but go from being operational cash flow positive to negative? It's all in the costs. So even though receipts are up $600,000, product manufacturing and operating costs are up $1.3 million, and administration costs up $2.5 million from $600,000 to $3.2 million. I'd like to see why that administration costs have increased by a significant amount. If it's just a one-off, staff costs haven't increased all that much, but it's really just that administration costs and product manufacturing and operating costs increasing by significant amounts. And that's why this company is no longer operational cash flow positive on a quarterly basis. And because they're still spending money on capital expenditure and intellectual property, cash on hand fell by $3.1 million and finished a quarter with $6.7 million. Not the best of quarters, not the best of years for Damstra, even though cash receipts had climbed. we did see an increase in cost, which meant the company was no longer operational cash flow positive. But one of the biggest issues for Damstra is their annual recurring revenue, and this was from one of their presentations. I really like these sort of companies to give us this sort of information, and if they didn't, I'd have to do this myself. But annual recurring revenue was growing. So this is on a quarter-by-quarter basis from Q1 financial year 21, 19 million, to the last quarter of that financial year, 34.5 million. So we did see a significant increase in our recurring revenue over that year. There could have been some acquisitions that did help that climb. But we did see the growth in our recurring revenue sort of peter out towards the end of financial year 21 and then fall in the first quarter of financial year 22 by a significant amount. In fact, it fell from 34.5 million to 29.3 million. And they've included this acquisition, which I don't think they should have done. So with that acquisition, it would have been 32.3 million. But the main focus here is our recurring revenue fell from 34.5 million to 29.3 million in one quarter. If I remember correctly, they did lose a significant client, so that would have had a significant impact. But the main thing here is we want to see annual recurring revenue climb on a consistent basis. So this would be concerning to the market, and probably a significant reason, maybe not the whole reason, why Damstra's share price has been underperforming and has been dropping like a rock over the past 12 months. Though I do focus on the growth of annual recurring revenue, there is a link between annual recurring revenue and cash receipts. If we do see ARR climbing through time, we should see also cash receipts climbing through time. And if I don't have the annual recurring revenue, I just use cash receipts. And when we look at the cash receipts history for Damstra, it has climbed since they listed on the ASX, so $4.6 million in the December quarter 2019 to $7.7 million in the September quarter, the most recent quarter. But over the past 5 quarters, it's been growing very slowly. We had a really good quarter, June quarter, and that's probably the reason why we did see the share price rally about 50% after the release of that quarterly report. So we saw receipts grow from $7.2 million to $10 million in the one quarter, but that has pulled back in the most recent quarter. So to be honest with you, the growth in receipts hasn't been that great over the past 5 quarters. And this is another reason why the market has been selling off Damstra's shares at the moment. Whenever you're holding a company, the last thing you want to see is a downgrade, because typically when you do see a company downgrade any sort of guidance, there will be a significant impact on the share price. This was one of the reasons why the share price fell about 16% on Friday, the 26th of November, and this was in regards to revenue. So the previous guidance was for revenue to be between 36 and 39 million, which was a 31 to 42% growth on the previous year, and the EBITDAs to be between 22.5 and 25%. The updated guidance was significantly lower than the previous guidance. So instead of between 36 and 39 million dollars of revenue, now it's only between 30 and 35 million dollars. So even though this is a downgrade, they are still seeing some good growth from previous year, and that does represent a 10 to 24% year-on-year growth. They also mentioned that growth would be between 21 and 37% if they excluded Newmont, and there was a scoping arrangement with Newmont. So Newmont wanted to do some of the services that Damstra have provided to them themselves, keep it in-house, that sort of thing. And EBITDA margin, instead of being between 23 and 25%, was now between 15 and 20%. A lot of assumptions they are making, and lower end of the guidance assumes minimal new business, and that the new acquisition, TIX acquisition, performs at financial year 21 level. So seems like they are being a little bit conservative with this updated guidance. I do like management to be conservative because there's more likelihood of an upgrade to guidance in the future if they do that. So potentially they actually exceed this updated guidance if these assumptions, or some of the assumptions, are a little bit off, and we could see an upgrade to their guidance in the future. Onto the daily chart for Damstra. This goes back to just after they did list on the ASX in October 2019. Unfortunately, they just listed just before the COVID-19 financial panic. And the bottom for Damstra in the panic was 43 cents, which, lo and behold, is the share price right now. So this could be a double bottom, a good low risk play for this company. And the share price recovery from the COVID-19 financial panic was quite stellar for Damstra. In fact, it rose from 43 cents to a high of $2.44 over a 6-month period. And you might see or notice there were two big up days just before the share price peak. And that is when Extreme Opportunities, the multi-fuel service, recommended this company. And it was almost perfect timing picking the top of this company because the share price has been falling ever since then. In July, or towards the end of July this year, the share price did rally from about 75 cents to $1.20. There was about a 50% rise in the share price. And that was on the back of their June quarter results. If you remember, in Cash Receipts history, Cash Receipts did climb to $10, but that was a false breakout. Even though there was some good and high volume, that was sort of a false dawn for this company because the share price has been under threat or under pressure ever since then. And the share price has fallen considerably since the end of October, falling from about 94 cents to a current share price of 43 cents. And there is potential that we could be seeing or nearing the bottom of this company because we are potentially at a double bottom, a massive rise in volume on the back of this AGM revised guidance. And if share price of 43 cents doesn't hold, there could be some more downside to this company. But value pickers like me are starting to pay a little bit more attention to this company just because a market cap of $83 million with annual recurring revenue just below $30 million. If this company can start growing the annual recurring revenue again, if management can just show us that these are only short-term issues, this company does look cheap right now. I still have questions about the whole business model, whether their enterprise or EPP is a good platform for the end users. I don't know about that. So there is that potential risk that if that platform, or there are better platforms out there, we might see Damstra continue to be under pressure, continue to see the annual recurring revenue fall. So right now, if you are maybe a risk-taking sort of investor, now could be a good time to take a position. Or if you're a little bit more risk averse, you want proof that this company has turned things around, I'll just wait and be patient to see what happens to the share price, to see when sentiment shifts, when the share price moves into a new uptrend. Just how low can Damstra's share price go? Well, technically, the lowest it can go is 0, which means 100% loss for current shareholders. The other question is, how high can Damstra go? And that's infinite. This company could be the best company in the world over the next 10 years, and you could see infinite returns for their shareholders. More than likely, that won't be true. But we have seen the share price of this company reach a high of $2.44 just over a year ago, which means there is potential that there could be significant returns for shareholders right now if management do turn things around. I think that's the question we have to ask ourselves. Can management turn things around? And I think it all depends on whether you're a risk-averse or risk-taking sort of investor. At this point in time, I'd just like to wait and see if, or wait for signs that management have turned things around. And one of the best signs would be to see annual recurring revenue starting to grow. Some more customers employing Damstra products and services. Now, if you do have any questions about this company, you love this company, or maybe you hate this company, I'd love to hear your opinion on Damstra. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.